Stocks slipped led by energy and utilities as concerns around Adani Group over the Hindenburg allegations linger. Financials also drag while auto and healthcare eke out gains.
Tata Motors climbs after it posts a profit after 2 years and JLR turns cash flow positive. Bajaj Auto too revs up on improved profitability and a renewed focus in the EV segment.
Dr. Reddy's beats estimates on Revlimid generic sales while Cipla misses expectations. Both stocks gain as analysts remain positive on their future prospects.
Dixon Technologies slumps on missing sales expectations and trimming its guidance. Patanjali Foods and Bikaji Foods dip on weaker sequential performance, but Chennai Petroleum gains on a strong showing.
A SEBI study reveals that near 9 out of 10 traders lose money in F&O transactions, and the ones gaining most are brokers. The release is aimed at cautioning against excessive trading, even as India makes the first move to T+1 settlements. Well, hello and welcome to Halftime Report. I'm Sonia Shenoy. With me are Sonal Bhutra and Mangalam Malu. Things are not looking good at all in the markets. In fact, the lowest point of trade right now, 250 points low on the index. Remember, 17,800 mark, which was, a key line in the sand on the downside that has been sort of broken. It is, of course, the Adani Group stocks and all the sentiment around it that has really hit the markets. But, just a couple of pockets that you'd want to perhaps look at. The recent low that we hit was around that 17,630 mark or so. For now, we are holding on to it. I mean, today itself, 630 was the low that we hit. Now around 17,640. So not looking good at all. The Bank Nifty is the one that's really dragging this morning. So down almost 1,050 points now on the Bank Nifty. It's a secular run on the downside. You're seeing it in the market breadth as well. 2460 stocks on the declining side. There are, of course, two big events upon us, which is the union budget and the FOMC policy next week. But it is, this whole overhang around the Adani Group stocks that perhaps is dragging the rest of the market as well. But at the moment, not looking good at all. Oh, it isn't. Yeah.
Not looking good at all. In fact, every time, if you just take a look at the intraday chart of the Nifty, every time we made even a feeble attempt towards recovery, it was vehemently shot down by the bears, and currently we're at the low point of trade. And you spoke about the Adani Group stocks itself. These are Nifty stocks that we're talking about. Adani and down 7.5%, Adani Ports down 12%. If you take a look at the other Adani Group stocks as well, there are big cuts that we're seeing. Total Gas down 20%, Adani Transmission down 20%. We're seeing Adani Green down 19% as well. So the broader market health not looking very good. And in fact, why just the Adani Group stocks? The quantum of declines has been so high. Case in point, something like a Dixon, which is down 19% after having fallen 30% from the highs on a miss in their numbers. Indus Towers down 12%. So it's just telling you that the sentiment of the market is extremely weak.
It is. And, even if there's a mild miss on earnings, it's a big fall that we are seeing. So definitely markets and investors not ready to take anything which is lesser than a beat or at least in line with expectations. For what it's worth, in a weak market like this, where we are seeing advanced decline ratio comfortably in favor of declines, it's at 1:6. There are pockets like Nifty Pharma, Nifty Auto and Nifty FMCG. These three sectors, at least sectoral indices, which are in the green right now. Nifty Pharma, which is the biggest gainer, 0.6% higher today. And let's talk about this and let's take this theme forward as well, because it was a big positive surprise for Dr. Reddy's this quarter. Revenues were up 27% in Q3 and the margins also saw a big 520 basis points expansion this time around. Erez Israeli, who is the CEO at Dr. Reddy's, is joining us now to discuss the earnings fine print as well. Mr. Israeli, good afternoon. Thank you so much for joining us on CNBC-TV18. This time around, US market performance was very strong. What led to the strong growth, and was it a one-off, and this is something which will reverse in the next quarter?
There were no one-off. We have lenalidomide sales as well as launches of a couple of good products, as well as increased market share of, let's say, commercial products. Overall, it was a kind of overall performance for us in the US market with no one-off.
And how much did Revlimid generic contribute in this particular quarter, and what is the outlook now?
It was contributed meaningfully, and we expect that tractions to continue meaningfully to contribute also in next quarters, but it may fluctuate from quarter to quarter.
And when it comes to the US, Mr. Israeli, what is it that you can guide us for estimated quarterly run rate in terms of sales, considering that You did about $350 million this quarter.
What we are saying that we will continue to grow our business. That's what we want to do also the next coming quarters and years. Normally, because of price erosion and time of product, it may fluctuate, but overall, we maintain the opinion that we'll continue to grow overall on single digit on the generic side, on the other business even double digit. And from time to time, we have products that will meaningfully contribute for a short period of time and then erode like normally happen in this kind of a business model.
Well, you saw 520 basis points margin expansion this time around, probably aided by your US business. What are you guiding in terms of margins this time around?
We reiterate our long-term strategy that we want to balance between short-term return for shareholders as well as investment into the future. And we said that on average, we want to get 25% EBITDA, 25% return on capital employed, as well as double-digit growth. On a long-term basis, this is still the guidance. This year, we are doing much better than that because in the, let's say, in previous quarters, we did a bit below that. But overall, we are very much on target, and that's what we want to continue to do. We want to use the money that we have to reinvest and build more businesses, more products, more technologies. And we are happy that we are creating the means to do that.
So the India business was strong, up about 10%. Can you tell us what led to that? Because the stock is also rallying quite a bit as we speak. It's up in a falling market. What led to the growth in the India business, and is it sustainable?
It is sustainable. It's a combination of investment in meaningful products and meaningful brands. We are absolutely India is a very important market for us, as we have discussed also in the past, in which we want to bring innovation, bring a differentiated product, create services. Most of our licensing in M&As are targeted this market, as well as our organic growth. So this is very, very important product in which we are planning to be a top 5 and maybe even beyond that.
And what are your thoughts on Russia plus CIS? That's done well. Will that uptick continue?
It is. It will fluctuate from quarter to quarter. Normally, Q3 is a strong quarter in Russia because this is the timing in which we are getting the biologics biosimilar. So it's a timing of tenders as well as the winter that naturally is in Russia and Europe. But overall, we believe that Russia will continue to do well for us, and the type of brands and type of products we have and the positioning of Dr. Reddy's, we will continue to do well in Russia.
Okay, and what's the guidance like for FY24 in terms of the pipeline of launches, complex generics? What is the expectation?
The United States will continue to do well, and we are going to launch around 30 products or so, as well as to have a good traction with the current portfolio that we have. And India should do well as well. So we are doing our best to make everybody proud of us, and hopefully you and the viewers will be proud of us as well. And as for big acquisitions, we are engaging in M&As, but unlikely to have big acquisitions. Our preference is to have small targeted acquisitions that are complementary to our strategy, which are not bringing a lot of risk, but give a great way to enter or to strengthen our positioning in the spaces that we decided to play.
All right. Thank you so much for joining us today and giving us all those details. The stock is a big gainer in an otherwise weak market. We'll slip into a short break and get you more on markets and stock-specific action because a lot is happening there. Stay tuned.
Plunges.
Well, it's not recovered at all. In fact, the market pressure is accelerating now. The Bank Nifty is now down 1,130 points. The Nifty is below the 20, 50 and 100-day moving average. So a lot of levels are being scaled on the downside. But on to a special now. Like we've been telling you, CNBC-TV18 has compiled a list of the top 20 stocks to watch for this year. It's a carefully curated list of companies that warrant a closer look in 2023. Ekta is standing by the big wall to tell us what's on her radar this year. Ekta, over to you.
Thanks for that. Well, that's right. Today on my radar is a stock from the healthcare space. So why am I looking at Apollo Hospitals in 2023? On the possibility that the company could, after seeing delays in the past, finally monetize its new vertical, its omni-channel platform Apollo Health Co. It comprises of the back-end pharmacy and mainly its digital interface Apollo 24/7, which entails the online pharmacy, teleconsulting and diagnostics tests being booked online. The company has indicated they will be looking at fundraising by the end of FY23. A little more on Apollo Health Co. Q2 revenue was up 43% year-on-year to around 1,668 crores and a GMV which is up 38% Q-on-Q to around 294 crores. It has 20 million registered users, completed 50,000 medicine deliveries per day and 5,000 virtual consults and diagnostic sample collections. Apollo has spent around 300 crores in the first half on Apollo Health Co. and estimates are that they will shell out around 600 crores in FY24 to further support it. Guidance-wise, Apollo Health Co., as per the company, is performing ahead of what was planned. It is expected to be EBITDA neutral next year. For FY23, the company is expected to close with a GMV in FY23 and double it in FY24 to around 3,000 odd crores. So 1,500 crores going to around 3,000 crores. The arm is aiming to be the number 2 digital player in the country. The company is also looking for a maximum of 20% stake to be diluted and has indicated 200 million is the upper end of what they will be looking to raise. The company will aim to have valuations of at least around $2.5 billion. Options are between a strategic and financial advisor and will possibly look at only one investor. So what happens if they raise this money? It will help fuel growth. Remember, the e-pharma market itself is estimated to grow to around $2.7 billion this year versus around $360 million in 2019, with today's internet penetration in the country at over 50%. It will also help ease the cash drain on the core business. How? Eventually help reduce Apollo Hospital spend, which is tracking at around 150 to 160 crores per quarter, and help the margins recover for the consolidated entity. A few risks to take note of: the competitive intensity from other heavy-pocketed omni-channel plays such as Tata 1mg, Reliance Meds, and not getting the desired valuations, further delay in Apollo Health Co.'s fundraising plans. All this which could further result in a cash burn for the consolidated entity. In terms of brokers, most have a positive outlook on Apollo Hospitals. For example, Jefferies, Motilal, BNP Paribas, Kotak all have buys with respective target prices, as you can see on the screen. Their rationale is that they are positive on the outlook of healthcare services, but they do acknowledge investor concerns of a delay in fundraising of Apollo Health Co. and elevated competition in the entire healthcare space.
All right, Ekta, thanks a lot for that. In fact, as a standard disclaimer, this is not a stock recommendation. We reiterate, the CNBC-TV18 editorial team does not advise on trading or investing in the stock market. Any investor or viewer is advised to carry out necessary diligence on their own through a certified registered financial advisor for investment decisions. Having said that, market continues to weaken. In fact, now we're on the verge of breaking that 17,600 mark for the Nifty as well. Almost 300 points shaved off, and the Nifty Bank now down 1,200 points. We'll take a short break, come back, continue our focus on the markets, which are in a bit of a slippy slide right now.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, yes, the market weakness continues, but we'll address some earnings now. Anupam Rasand posted a good set of Q3 earnings. Revenue is up 44%, EBITDA is up 34% as well, and profits have also seen some growth. The stock has fallen from the highs, though, at the day's low right now. Vishal Thakkar, the Deputy CFO of the company, is joining us now to discuss the earnings fine print. Mr. Thakkar, good afternoon. Thank you so much for joining us. Well, this top-line growth of 44%, can you tell us how much of it was impacted due to the fire incident that we saw in the quarter gone by, and what is the split between volumes and realizations this quarter?
Thank you for having us on your show. In terms of, yes, the real numbers have been good for us. Yes, because of the fire incident, we would have lost around 15 crores a month, so it should be around 45 odd crores of loss of revenue that we would have seen because of this. Another thing, in terms of volume and price, I think they both have been playing a good role. So if you really look at it, primarily product mix, change in product mix, volume and price, all three have given a fairly an even Stevens kind of a share in terms of the growth. So yeah, we're looking at a good growth. The market looks good for us. And as we always continue to mention, that the business model that we have created, which is more having a long-term contracts with long-term visibility of demand from our customers, along with the pass-through in terms of pricing, has really played out well for us, and that's holding us well.
Let's talk about those long-term contracts itself. You signed 2 contracts with one of the European crop protection companies, etc. How big are the sizes of these contracts, and at the same time, what revenue are you expecting in this entire fiscal and importantly the next fiscal?
Sure. So Mangalam, in terms of those 2 contracts, those 2 contracts were not very large ones. They were looking at around about 100 crores of revenue over the next 3 to 5 years. The question is that were very critical, very interesting for us, because these were the first time they would be manufactured in India and moved from Europe. So that was something very good, and the speed at which we could commercialize it for our customers was something very interesting, and that's the reason we shared that with the market as well. Coming back to the volume in terms of revenue growth, as we have been mentioning in the past as well, we would continue to grow at our historical 5-year growth rate, and we should try and do better than that. But let's guide at the numbers around what we have been doing it for last 5 years.
What would that number be? I mean, I'm just looking at your last 5-year revenue CAGR. It is closer to around 30 odd %. Is that the growth that you're guiding for? I mean, so is that you're targeting?
So I would tend to go between 25 to 30. I would go with that, because that's where we would really keep it for now.
30% growth is what you're looking at for the full year, is it?
Sorry, I couldn't hear you well. Can you just?
Is this your full year growth target for FY24?
Full year FY24, we would be looking at around about 25 to 30% growth rate. Okay. Let's see where we end up at.
So 70% of your revenues comes from the export market. Can you tell us a little bit about that? How have things shaped up? Are you seeing any slowdown in any key markets? And if yes, what would this mean for your target?
Okay, so here if you see that historically our markets has been export oriented, and our large customers have been in terms of Europe, Singapore and Japan largely. And if you see till now also, we have been seeing a buoyancy in terms of demand. We have not seen any revision in the demand from our customers. In fact, in a couple of contracts, the base volume that they had promised has only increased. So to that extent, we are seeing a fair bit of a confidence in terms of the demand for now at least. And if you look at the conversation that we have been having with our current and potential customers across all the 3 segments, especially on the fluoro side, we are seeing very, very encouraging conversations there.
Okay.
So for now, I think we would be comfortable with what we have been guiding now.
Okay, so when you talk about the fluorination segment, already contributed around 15% to the top line. You have spoken about expansion plans as well here. 420 crore rupees, if I'm not mistaken. You also raised funds via QIP. What are the expansion plans looking like right now? And once all of this does come on stream, say by FY25, what kind of revenues are you looking at, and margins as well? Because raw material pressures continue for you as well. Do you see them abating? And with this expansion, will you be able to save some costs as well?
So let me put it in two perspectives. Let's first talk about the capacity first. So capacity, we believe that we should be able to do it in 24 months. We should have the capacity in place, give or take a quarter. That's where we would see. In terms of revenue, we would, as I said, we will continue to grow as we have been mentioning. Our next 5-year growth should be in that kind of a that kind of a range. Probably if we can do better, great. But let's put it at those numbers. In terms of margin, as we said, again, the business model that we have deployed, I think margins are practically the numbers that we have been guiding, anything between 26 to 28% of EBITDA margin. I think we will continue to be there. We do not see it moving anyway otherwise. Probably a quarter or two we may have a higher, and quarter or two we may have a little less, a couple of 100 basis points plus or minus on that is where we would end up.
All right, Vishal, thank you so much for joining in. Would have loved to speak a lot more with you, but maybe another time. Now's not the day, because the decline that we're seeing in the markets right now is only accelerating on its way down. In fact, now Adani Ports is down 18%. When we started the show, it was down 12%. No mean feat out there. It's only further gone lower, and giving it company are a lot of these other companies as well. We have Bajaj Finance, which has slipped to the low point of trade. In absolute terms, not too much, but 2% from the highs. SBI is down around 4%. IndusInd Bank, the entire banking pack, the banking index is now down over 1,200 points. So we'll just keep an eye out on the markets itself. Asian Paints too has corrected from the highs. The FMCG pack was actually holding up, but now that's giving way as well. The Nifty on the brink of breaking 17,600. The Sensex down 1,000 points. It's time now for a short break, but as we do that, let's also apprise you of the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. We gave you the question at 9:14 today, but in case you missed it, here's today's question again. The Finance Minister has asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% to 25%. When was that? Which Finance Minister was that? A. Arun Jaitley, B. Piyush Goyal, C. Nirmala Sitharaman, D. Pranab Mukherjee. Send us your answers on Twitter. Post them as a comment on the question tweet at CNBC-TV18 News. Use the hashtag budget with CNBC-TV18. Hurry, send us your answers. Remember, we will announce the winner at 3 p.m. today.
Welcome back to Halftime Report. Things are looking quite precarious at the moment. The Nifty is now down 300 points from the highs. Just look at that. It's a steep slide. The market is extending its losses. And this is not any normal fall. This, is quite cascading, the kind of sell-off that we're seeing across the board. Banks remain the big drag. So 1,340 points gone on the Bank Nifty itself. This is turning out to be quite a troublesome day for the bulls. But the budget is the next big event to watch out for. It'll be the last full budget before the general elections next year. And the Finance Minister is likely to play a balancing act between populism and fiscal prudence. Sources say one of the major themes in the upcoming budget would be to support India's middle class and lower middle class. The other big theme is job creation in urban areas and for workers as well. Parikshit Luthra has more on this exclusive. Parikshit, over to you.
Well, we are hearing from our sources that Budget 2023 could be about the middle classes. Yes, the government has been receiving feedback that the middle classes in the country want their concerns addressed. They have felt neglected in previous budgets. And so there could be a series of measures to address concerns of the aspirational classes. When it comes to tax concessions, budget may introduce new tax slab at rupees 8 to 10 lakhs, with a tax rate of 10 to 15% against 20% currently. This will be the big one to increase the spending power, the purchasing power of the middle classes. The 30% tax rate on income above 10 lakhs may be reduced to 25%. The government is also considering rationalizing and reducing some cess rates. Benefits under ATC may be increased from 1.5 to 2 lakhs. There is also a proposal to increase tax benefits under ATD. Job creation will be the big focus in this budget. In fact, there is also a scheme which is being discussed to increase employment in urban areas. At the same time, the government has been looking at ways to increase and support the gig economy in the country, and there will be possibly a scheme to support gig workers, young entrepreneurs in the country with loans to support their business enterprise. The FM could nudge banks to support MSMEs more. So you could hear of announcements on interest subvention and loans without collateral for MSMEs. when it comes to the Kisan Samman Nidhi program of the Prime Minister, well, we believe that outlays under this could increase, and the transfer amount which goes to farmers could be increased from 6,000 rupees to 8,000 rupees. Then, when it comes to the PLI schemes, well, the FM could announce an enhanced outlay for new PLI schemes which are specifically aimed at labour-intensive sectors with high export potential and which involve large number of MSMEs as well. There will also be a big infrastructure push when it comes to the capex allocation in the budget. But net-net, this budget will be for the middle classes and will be aimed at creating jobs in urban areas and also in the gig economy sector.
Okay, Parikshit, thank you so much for joining us with those important details. Any tax cuts, of course, will be taken with both hands by the taxpayers as well. For now, we'll slip into a short break with the news that markets, they continue to see a downtrend. We'll track all that for you and also put focus on Adani Group stocks, which are under a lot of pressure. Adani Enterprise down 15%, Adani Ports also down 20%. We'll get you all the details on the other side of this very short break.
Welcome back. There is a precipitous decline in the market and it's getting only brutal, the sell-off, as by the minute. In fact, as we speak, we were just talking about how the Nifty has breached that 17,600 mark. Well, we're 50 points below that as well, 17,550 on the frontline index. The Nifty banked down almost 1,400 points, 1,100 points shaved off the Sensex as well. And what's not looking good is the market breadth. We have nearly 10 stocks declining for every stock which is advancing. Frontline stocks falling 10, 15, some even 20%. So there is a fair amount of fear, and that's reflected in the kind of jump that we're seeing in India VIX. One of the highest single-day jumps that we're witnessing in that volatility index. The India VIX is up almost 22%, and these aren't just pre-budget moves that we're seeing. The India VIX has spiked about 29% this week itself. Prashant joins us in the studio. We also have Nimesh with us, who's made a fair amount of calls to the dealing rooms, etc., trying to get a sense of what's happening. Prashant, you know, what a big decline. What is it that the market's fearing?
I mean, it's got to be, of course, what's happening with the Adani Group stocks, right? That's of course, a big part of it, what you're seeing. Because, you know, let's put up Adani Ports, for example, right? I mean, it's a business which is... which runs some of the largest ports in the country. It's a solid business. I mean, it's a business which many investors over the last 10, 15 years have visited. I mean, the ports and seen these businesses, seen the ports operate. And out of the group, I mean, it's also the most widely tracked company, right? I mean, it's a well-tracked company. That is down 20%. So I think there is some nervousness, of course, around what is happening with this group. It's, of course, one of the largest in terms of market capitalization. And I think that is feeding through in other parts of the markets in various ways. I mean, when you have this kind of market situation, it's very tough to say where you know, where the next impact really comes through. Banks, of course, it's a bit indiscriminate in that sense also. I mean, I have to say, because I think, you know, eventually we've seen these kind of episodes before as well. The dust does settle, but in the midst of it, it's very, very difficult to say that, well, you know, this is... I'll tell you, Kotak, for example, this morning, Kotak Institutional Equities, one of the brokers which covers Adani Ports, had a note out, and they said, well, they sort of value Adani Ports at some 11 times EV/EBITDA, the price target of 840. I mean, stocks at what? 570, right? So this is what, I mean, a little bit of panic can do to the market. And I think that is what the market is in the grips of right now. On the Nifty, if you can have the intraday up, you know, because of the magnitude of the fall, 200 points on Wednesday and now 300 plus points on today, what has happened is you got to zoom out a little bit and take a slightly longer term view of the Nifty. So, you know, the December lows, the January lows, all those are out of the way. And what you're now looking at is the full retracement, you know, Fibonacci retracement levels of the full rally from 15,183, which was the June low, to the all-time high of 18,887. The first retracement, which will come into play, is the 38.8% retracement. That number is at about 17. I just sort of drew that. It's 17,472. We're at 17,563. It's basically about 100 points away with this precipitous fall that we have seen, I mean, a bit of panic, of course. I mean, very, very evident if you look at the screen.
Also, you know, Prashant, there's this fear psychosis, right? Generally, as they say, the markets take the stairs up and the elevator down. I just want to put one brokerage view on board. Jefferies put out a note this morning on the Adani Group where they said that over the past 5 to 6 years, the group has diversified its borrowing mix and reduced the share of Indian banks in their borrowing. The share of Indian banks in their borrowing has gone down from 86% in FY16 to 33% in FY22. Just quoting from the Jefferies report. And they say we do not see any material risk arising to the Indian banking sector. So, you know, this is just one view, of course, that's put on board. At the moment, there is panic, but, you know, there are a lot of opinions coming through. But Nimesh has been working the phones as well. Nimesh, what is the view of the dealing room? And on the stocks particularly, what are you picking up?
Okay, so first, let me talk about the Adani Group stocks, because as we speak, you know, clearly it looks like there is panic because now Ambuja Cement is down 25%. All the F&O stocks of the Adani Group, Adani Port down 20%, ACC is now nearing 20% fall, and Enterprise is on 15%. So let me start with Ambuja Cement first. So, you know, why I'm talking this? There are some important numbers to track when we say there is panic selling and there is panic on the stocks. The current price of Ambuja Cement is close to 347. Now, if you look at the open offer price of Ambuja, that was at 385 rupees per share. If you look at the preferential allotment that Ambuja did to the promoters, which is Adani Group, that was at 418.78 per share. So we are way below the preferential issue price as well as the open offer price as well, as far as Ambuja is concerned. And this is one company which has got a solid track record, solid assets, you know, backed by cash flows as well. And there is a tailwind of the whole cement sector doing well going forward. So while there is panic, yes, the stock is down 25%, but do remember the two data points. One, the open offer price was 385. And the preferential allotment was done to the promoters at 418.78 per share. So that is Ambuja. Even if you look at ACC, the current price is now all the way up to 1765, down 20%. But even if you look at in case of ACC, the open offer price of ACC was 2,300 rupees per share. So it's way beyond the open offer price at which the promoters have bought from the Holcim Group. So that's ACC for you. Even if you look at Adani Ports, even Prashant pointed out, the stock is down 20% down circuit as we speak, close to 575. And Kotak today put out a note and they said it's a great asset to own. Valuation wise, it's now come below 11 times FY24 EV to EBITDA, and they have a target price of 860 on the stock. So again, that stock is way beyond what Kotak's target price is. Even if you look at Adani Enterprise, that's an important one. Remember, the FPO started just today for retail and non-institutional investors. The current market price, it's fallen to all the way to 28.95 as we speak. But if you look at the price band of the FPO, it's between 3112 to 3276, and on that there was a discount to retail investors of 64 rupees. Even if Adani Enterprise is now trading below the FPO price as well. So that again has something to note about. Remember, the anchor investors put in money at the higher end of the upper band at a price of 3276, and they've raised, the commitment is of close to 6,000 crores, but only half will come, like 50%. So 3,000 crores has come as far as the anchor commitment is concerned. So these are the numbers as far as the individual Adani Group stocks are concerned, whether it's Ambuja, ACC, Port, and as well as Adani Enterprise. Looks like there is panic selling across all the Adani Group stocks. So that's the overall number as far as the Adani stocks are concerned.
Okay, so that is about Adani Group. Thank you, Nimesh, for all those data points. But generally, your conversations with all the dealers, what is it suggesting? Is it only led by this group, or there is more weakness that we're expecting in the markets as well?
There is more weakness, and the overall feedback was there is selling pressure in the financial names. That's a bit surprising. Today we had CLSA and Jefferies both putting out a note suggesting that there is no big risk to the Indian banking sector as far as the Ambuja Group is concerned. But still, then there is massive selling, is what I understand, in all the financial stocks for secondary running. I mean, where do you see the bank index falling almost 6% in 2 days? Yeah, on Wednesday we saw 3% cut, and now as you speak the bank index is down 3.5%. So that's clearly a feedback that there is selling pressure in all the financial names, especially the private bank stocks in today's trade from the overall FIs. The other feedback is there's going to be a small market at close Nifty basket buying. Now that needs to be seen whether that plays out in the last half an hour of trade in today's closing. But that's overall feedback that there's going to be small MOC buying as well in the Nifty names. In terms of buying interest, there is clearly some bit of buying interest in the auto names, and some bit of small nibbling is happening in the technology stocks. So those sectors seems to be favored, but there is clearly selling in the financial stocks, and of course We spoke about the Adani Group stocks under pressure and some key data points that I've highlighted in terms of individual stock prices in all the Adani Group names.
Right, Nimesh, Prashant, thank you so much for joining us and giving us the insight. In fact, as we speak, the Nifty at 17,550 is just at the 200-day exponential moving average. It's seen a bit of a bounce from there, or planning to hold on here. What happens from here is something that we'll have to watch. 200-day exponential moving average on the Nifty, 17,550. And Nimesh pointed out some of the fundamentals of the Adani Group stocks and the prices at which promoters have also bought stake in, ACC, Ambuja, etc. But as we speak, it seems like fear has fogged all those fundamentals. Adani Ports has now extended its cuts. It's now down 25%. And mind you, this is a Nifty stock that we're speaking about. Adani Ports down 25%, Adani Ent down 15%, and all the other Adani Group stocks down anywhere between 15 to 22 odd percent.
Well, good gets thrown out with the bad, right?
Right.
When you have panic, and I think what you're seeing, and I'm just looking at, we were talking about the Adani impact, but look at what's happening in the rest of the market as well. And this is what I was saying, that when there is a little bit of panic, you want to first, you should first ask questions later, because and I think some of that is happening. Banks, of course, I mean, we saw selling, which is only accentuated. But even, I mean, excluding this story and the financials and the Adani Group, etc., there is a fair bit of selling which is coming
through. Not only the bank stocks, even if you look at the PSUs, which have been slightly overbought from the retail investors, they are getting sold into. There is nothing to do with HPCL down 7%.
Yeah, that's what I was looking
PFC,
at.
RS is down 6%, BHL is down 7%. So it looks like there is retail capitulation now, from the FNO side, because those were overbought stocks, the so-called PSUs.
And
now
to boot,
those are getting sold
earnings
into.
have not been all that. I mean, look at Team Lease. I was looking at 9.5%. Dixon was with us on the channel
19%.
earlier. 18, 19%. And I think it's kind
Indus
of
Towers.
one feeding into the other. Bad earnings getting beaten down more with the market being down, and of course exerting pressure vice versa as well. So it's a bit of a negative feedback loop we've got going.
And to think of it, Prashant, we started the day by saying that it's a good morning because there's a holiday before and a holiday after. And
Well, that still holds, right?
That still holds.
the only saving grace, right, that you're entering into a weekend, you have to trade tomorrow. All right, but keep an eye out on the 200-day moving average. It's still holding for now. 17,290 is the 200-day moving average. All other averages have been breached on the downside. It is an ugly day, no two ways about it. The Nifty is now at the lowest point of trade. It is free fall in the market that we're looking at. The Sensex over 1,000 points gone. But thanks a lot for watching. We will wrap up with this edition of Halftime Report. Business Lunch will take all the action ahead.